Good afternoon and welcome everyone. Thank you for joining us today. Our forum, Impact Investing in Latin America, Capital Driving Social Return. We have a terrific group of participants. Thank you so much for coming out. For those of you who don't know me, my name is Nancy Anderson. I'm Senior Director of the American Society and Council of the Americas and head of our office here in Miami. I'd like to thank our host, Juan Pablo Cappello, and all our friends at Greenberg Traurig, longtime supporters of the Council of the Americas, for so kindly welcoming us into their new fabulous home. We love the space. Welcome also to our distinguished discussion leaders, Felipe Arango, Elisa Erickson, and Jorge Rubio. And let me thank our Miami program sponsors, Bunge, Chevron, Citi, and FTI Consulting. I'd like to thank our supporting partners, Columbia Business School Alumni Club and University of Pennsylvania Alumni Club. And lastly, Madeline Johnson, the architect of today's program, for all her work working with our expert panelists. As many of you know, the Council of the Americas' mission is to promote economic and social development in the Western Hemisphere, and innovation has always been at the heart of our initiatives. Following the fall 2011 publication of America's Quarterly issue on impact investing, we spoke with several of our members about the importance of holding a forum here in Miami where we could engage business, NGO, academia, and others on this important topic. Impact investment, a trend on the forefront of innovation in Latin America, is essentially channeling for-profit investment as a force for social development. It has huge potential to address pressing social challenges in our hemisphere, for reducing poverty, creating affordable housing, increasing access to education, healthcare, and capital for businesses, promoting sustainable agriculture, clean energy, to name a few. To lead today's discussion, we are fortunate to have our friend, our host, and expert, Juan Pablo Cappello. Juan Pablo is a principal shareholder in the Latin America group at Greenberg Traurig, and previously was a partner, as many of us will remember, with Patagon.com, having restructured the sale of the controlling interest of the company to Banco Santander for more than $750 million. He's a longtime advocate for entrepreneurship and innovation in Latin America, a board member of Endeavor, legal advisor to LAFCA, serves on the advisory board of the Pino Center for Entrepreneurship at FIU, and is active with the FIU Annual America's Venture Capital Conference, of which ASCOA are proud supporters. His most recent ventures are founding Sauber Energy, a green energy company in Chile, and Idea.me, an online crowdfunding platform for creative projects in Latin America. Juan Pablo, thank you very much for your generosity, not only in hosting us today, but for leading what I'm sure will be a fascinating discussion. And just to remind everybody, there's going to be also a reception after this, which is going to be in the space behind the receptionist by the elevators. Thank you.
Yes, I feel like my major contribution today is, one, I'm paying for the parking. So any of you, yeah, we are validating, but I think only until 6. So if anyone has to rush out, please get validated, because if not, your parking will probably be, more money than many of you made your first summer job. And two, and probably equally important, we are sponsoring this cocktail party afterwards. So, I hope many of you will join us for that. I'd like to especially thank Madeline, who helped really organize this panel. For me, it's incredible to think that on a Thursday afternoon in the summer in Miami, we can get close to 100 people together to talk about impact investing in Latin America. I actually look back just a couple years ago as I began to get involved in this space, and we began to think about funding our company Ideame, and just trying to get information about impact investing in Latin America. I just think of all the incredible misinformation that I got at the time, and I wish there had been a panel like this. It probably would have saved me 6 months or a year of walking around with some significant misconceptions. The format, we're going to have a roundtable discussion here. If anyone has any pressing questions, feel free to raise your hand. We'll try to address them on the fly. We will have a Q&A at the end, maybe about 20 minutes or so. And then we're going to have the cocktail party afterwards, and you all are more than encouraged to stay and ask any questions that don't get addressed by our panelists. As Nancy mentioned, we have 3 very distinguished panelists today. really Madeline and the council, from my perspective, has really outdone themselves in terms of bringing this group together, both because they're each individually very well known and they bring very different perspectives to what's going on in impact investing. We have Elisa Erickson, who's the Director of Investment at the Omidyar Network, which is a philanthropic investment firm. And she manages investments across the entrepreneurship and financial inclusion initiative. She was previous to being at Omidyar. She was a chief lending officer, or the chief lending officer at the Calvert Foundation, where she was responsible for over $325 million in assets. This is actually the first time I've seen Eliza in the United States, or close to the United States here in Miami, since we aren't quite in the U.S. Eliza's, somebody who's really become, in the relatively short time she's been at the Omidyar Network, a real referente in the impact space in Latin America, and somebody who travels even more than I do to the region, and we're very lucky to have her and have her here in the Banana Republic of Miami. We also are joined by Felipe Arango, who has a number of different hats. The way lawyers often are said that we have too many hands, because we say on the one hand, on the other hand, and on the other hand. Felipe is an incredible resource in the impact space because he has a number of hats and is quite involved in the space in different areas. He's a managing director of Trippplus Capital, which is an impact investing firm that scales disruptive innovation in the region. He's also a partner of BSD Consulting, which is one of the few consulting firms focused on sustainable development strategies, primarily advising multinationals. He's also the managing director of Oro Verde, a social enterprise co-owned by miners in Colombia. So he brings a number of different perspectives to the social investment space, and we're very, very happy to have him. He's also a partner in Ideame, so we're doubly happy to have him. And then we have Jorge Rubio, who's from a little institution you all may have never heard of, named Citibank. He's the director of Citi's Microfinance and Community Development for Latin America. He was a founding member of Citi's Global Microfinance Group in 2005. Understand his focus now isn't just micro-lending, but sort of inclusion, financial inclusion as well. In 2009, he was invited as an associate to the David Rockefeller Center for Latin American Studies at Harvard University, where he worked in the area of socioeconomic development and other things. So again, with Jorge coming at it from a more institutional perspective, I think we're going to have a very lively discussion, and hopefully people on the panel won't hold back or be too polite. So with that, I sort of had the first question to the panel, which seems like sort of an easy question, but at least when I was getting into the space, I was surprised by the variety of answers, which was sort of, how do you all define impact investing? Is it something where the primary mission has to be social impact, or can the primary mission be financial returns? Can it be a hybrid?
Good question. As you said, it's not an easy question to answer. It should be the easiest question to answer in terms of defining what we're doing, but it's a little elusive at times. I think the broadest definition of impact investing include really all investments that produce financial, social, and or environmental returns. So the distinguishing factor is these are investments for financial return. We're expecting at least the return of principal, and usually a financial return on top of that. But also, sort of inherent in the definition is some form of social impact, social and or environmental impact. Omidyar Network actually has a pretty precise definition that is sort of a subset of that broader umbrella, which is really, we look for entrepreneurs, much like Felipe, that are disruptive in their thinking and are scaling essential products and services to the base of the pyramid. And when we see essential, we think of health, healthcare, housing, education, financial services. And so they have to think big. They have to think about serving millions of people with essential products and services. And they have to return our money with financial return, and often significant financial return because we're investing quite early stage. So these are before the businesses have broken even, sometimes before they're even producing significant revenue. So we do provide pretty much venture capital in that segment. So that's our definition.
Well, I'm going to give sort of a different perspective to things because we don't label ourselves an impact investor. We are a financial institution, a financial services company with a presence in over 100 countries and a well-known commitment to emerging markets. Most of these emerging markets, well, we all know that around 75% of the adult population in these countries don't have access to financial services. So for us, the way we define impact is really our ability to contribute to the development of more inclusive financial systems. And for us, it is a natural step to take, just for a business opportunity. You know, the demographics in all these countries, make it a natural step for us to think around, how can we get all these people involved in the formal financial system. Now, with technology and the rise of microfinance, obviously, these opportunities became a little, more or clearer, I would say. But it's not that we have a fund where we are, investing in impactful projects. It's just how can we grow our products or services and develop more appropriate and accessible products that serve the needs of this population. And we also need to think, when we do it, on building the financial capabilities of the customers that we are now reaching. It's not a question of delivering the same more products to a new target market. It's a question of really understanding the needs and working with the people that have understood the needs of these customers. We also realize that we don't have directly in most of these countries the presence or the branches in rural areas, isolated communities, but we can work with partners that do. So we've done a number of things initially around microfinance by providing products and services to financial intermediaries. We have over $600 million around the world in over 40 countries, funding over 150 institutions around the world that have microfinance portfolios. And as I said, now with technology, we're also engaging into a new space of mobile and mobile payments and how we use mobile phones to deliver products. So back to your question, it's not that we define impact investment as a separate thing to what we do. It's really to embed these initiatives in the bank's businesses and just take opportunity of our presence in all of these markets.
And Felipe, I know you advise often multinationals on their social impact strategy and companies in which to invest or support in terms of social impact. How do your clients, when you're advising them, multinationals, how are they looking at what social impact is for them?
Thank you. Hello. Thank you for the very humbling introductions and for hosting us. I think one of the first things we can see is that it's an evolving concept, and sometimes it's like sand in your hand. The more you want to grasp it, the faster it falls from your fist, and there is an evolving as it goes mainstream. I think there is an evolving ecosystem of different definitions of what impact investment can be. And it's different for a multinational, it's different for a financial services organization, it's different for a hybrid, non-for-profit, for-profit firm or network. And I think it's very important for us to understand the different lines of entry to this subject. At the root, I think it's about a transformation in the creation of value. And I think Jed Emerson's description about blended value is investment is about generating value. Before it was only about generating financial value. Now we're getting social and environmental value into the mix. At trippplus, we try to identify social enterprises who have been set up from the beginning to generate that social and environmental value. Multinationals and foundations have strategic philanthropic initiatives that also generate value. So you could say that strategic philanthropy gets into the spectrum of impact investment. Also, financial services organizations have financial inclusion or SME development, or lines of investment in renewable energies, or lines of investment in reforestation, carbon credit projects. All of those are generating value. And far on the right of the spectrum, there has been a movement that came before this one, where we have been very much engaged also, and it's the socially responsible investment movement. And this was investments that wouldn't create harm. So before investing, there is also a plethora of initiatives like the Principles for Responsible Investment and the Equator Principles and so on and so forth, where financial institutions were making sure that at least their investments didn't have a negative impact. So we're looking at a spectrum of definitions, and sometimes perhaps it's important to put the issues at the center of it and to understand where these different players can approach it. But they all have the potential to generate blended value with the capital.
And in terms of that blended value, so if it's sort of investment first or impact first or catalyst first, whatever, I imagine the issue of sort of how do you measure, I mean, I think we all have a sense of how you measure the financial return, but the social return in terms of the metrics that you use, et cetera, is there becoming a sort of market standard, or is that still in a very much a state of flux? Are there some sort of best practices? Where are the best practices coming from?
Yeah, I feel like this is when I start to show my age in this industry, because we have been talking about this for well over 20 years. But it is improving, I would say. There is a group called the Global, it's the GIN, the Global Impact Investing Network, based out of New York, that was incubated and funded by the Rockefeller Foundation. And Rockefeller, you can argue, coined the term impact investing, and it's only a couple years old. So it's not surprising there's a lot of confusion about it. It's really only been branded as such. A lot of us have been doing impact investing for a long time, but we didn't know that's what it was called. So at the GIN, one of their primary efforts is something called the Impact Reporting, it's IRIS, the Impact Reporting Information Service, I believe, that basically is a catalog of indicators. And depending on the sector that you're in, whether you're in agriculture or financial services, what you're going to measure is quite different. But what we've gotten better at is consistent definitions. So you can actually go, it's an open source framework, you can go online and find a catalog. It doesn't choose which indicators you should measure, because that's up to you and what's important to you, and no one's going to be able to choose that for you. But it does standardize the definitions of the various indicators.
And with companies that you work with, do you use that as sort of the agreed upon set of principles that you agree to and you measure them by?
Yeah, I mean, we have always, I think, been pretty committed to not overdoing this, because it can crush a small enterprise to have to report out on 100 metrics. What we find are the most powerful metrics are those that are actually intrinsic to the business. So, the best impact businesses are those that, who grow and create profit. The more they grow and the more they create profit, the more impact they have. So it's talking about, in the case of Citi, the depth of your reach with financial services, going down the pyramid, et cetera. But it doesn't mean the social and financial metrics aren't, sort of fighting each other. I think the best ones are the ones that are actually tied together. So the more people you reach, the more impact you have. So that's kind of how we look at it.
And say at Citibank, that issue of the tension between maybe the social and the financial, how do you try to align those interests? You made the point, I guess, when you started, that you don't view, this as a financial institution, you don't view the social as, the driver. The inclusion, I guess, if I understood you correctly, sort of good for business, broadly defined. How do you, what metrics do you use? How do you decide if you're being successful or not, at least in the short term?
Yeah, we do have a dual approach to financial inclusion. We have the Citi Foundation, which has been very active in the space since the 1960s. They were giving grants to groups like Acción Internacional or Women's World Banking in the early days to sort of understand the dynamics, test different models, become really a thought leader around this as well, and start measuring impact. Now, from the commercial standpoint, it gets more difficult. From the commercial standpoint, we decided to, as I said, not to create a separate fund, but to really embed this in the bank. So everything we do needs to fall within the parameters, the profitability parameters of the bank, and the adequate risk as well. Of course, we know that of the 600 or 650 million that we have outstanding in microfinance institutions, we know that 95% of the end borrowers are women. We know that over 70% live in rural areas because of the due diligence that we make to these institutions and how we understand their business models. So it's not that we don't care about the social impact. I mean, we know it's there, but what we measure, it's the level of inclusion. It's the depth of the products. It's how you grow the pie, so to speak.
And just so I understand, that initiative within the bank, does it permeate sort of all business units of the bank, or it's a discrete entity or sort of business unit within the bank?
Well, we are one of the, I would say, perhaps one of the 5.
You can brag. Go ahead. It's fine.
5 or 4 units that report directly into the corporate center, up there to the CEO, because that gives us the ability to move around the bank. It's a huge institution, and we can do initiatives with the consumer bank. We try to do lots of things with them now, with the mobile wallets and everything. We're working very closely with the consumer bank, but we also work with the corporate bank, and we also work with the private bank, because we have the ability to bring to the table, I don't know, OPIC with private bank clients, ultra-high net worth individuals that are interested in funding microfinance in Africa, and we have a presence in Tanzania or in Uganda, and we can structure a transaction for a Ugandan MFI. So that's what should differentiate Citi, bringing together all these different stakeholders and working on a solution, always in local currencies, always in local law, with our local executives from Citi Kampala. So that's sort of the idea.
Just a short compliment on the metrics, and I want to quote Albert Einstein here. He said once, "Not everything that counts can be measured, and not everything that can be measured counts." And I think we've seen from the development world in executing development projects, sometimes the burden, as you mentioned, on quantitative, credible information is so heavy that the actual impact generation, long-term process, capacity building development plays a second role. So I really think we have to be careful there. At trippplus, we are trying to have a hybrid approach to this. And the first one is to use quantitative measures where they are appropriate. The financial ones are easy, and so is the due diligence. to use iris indicators when there are quantitative indicators specific to a health initiative or an education initiative or a gender initiative. And there's a great reference for all of you there in the iris. Iris really did a great job of collecting most of them. GRI also, the Global Reporting Initiative, which we've worked for many years, did a good compilation of indicators. But we really want to tell stories also. Stories are a great way of creating impact, and the stories of these social entrepreneurs are about long-term systemic transformation. And sometimes it requires listening to those stories and collecting those stories mixed with the quantitative data, and to have some qualitative assessment as to how they are approaching in their management and in their strategies the impact they want to generate. So it is definitely complex, and I think we also have to be, although it's very much needed to have comparable databases, we also have to be flexible in integrating different kinds of impact assessment, especially taking into account that the transformations that we need, which I think we should never forget about, that are long-term processes and are iterative processes and require perhaps initiatives or indicators that we cannot have beforehand. And we have to be open to the creativity and innovation of these entrepreneurs.
I have a follow-up question for you, since you're based in Latin America. My sense is, at least in the United States, there is the beginning, I think a conference like this sort of shows, not only interest, but sort of belief that impact investing can be good for business. Is your sense in Latin America, especially when you're talking that, there are some metrics, but certain things really can't be measured, et cetera. Is your sense in Latin America that there's an acceptance or a awareness or a belief that impact investing, some things that maybe can't be measured directly, are ultimately good for business?
Definitely, and I think it's once again, it's important to have some of the history here. The sustainability movement or the CSR movement already proved the business case for sustainability. And it's in the sense that an organization overall will not be competitive or will not respond to societal expectations if they don't transform their conceptual of generating social and environmental value. So I think in the business sector, that business case, you start to see it more and more firm in the boards and in the CEOs of understanding I need to create impact to be competitive. In the social enterprise, innovative aspect of it, I think we're looking at something similar. I use this example sometimes. If we were to position ourselves 10 years ago, and Pierre I got it right this time, was going to tell us, I'm going to start eBay, which is a social web auction platform. Who could have come up with the metrics for that? Or if someone would have talked about Twitter, or if someone would have talked about Facebook. These are initiatives that got funded beforehand. We know that we have to solve the social and environmental challenges, and Latin America in particular has some of the most difficult ones. So in a way, these are the companies of the future. So there's got to be value there in the long term. There has to be, even if sometimes we can measure it. I think we know more and more that the value creation long term is in the hand of the social entrepreneurs.
Yeah, I was sort of wondering, I mean, do you agree with that, or is there still an evangelical aspect to travels?
I think there are a couple of different perspectives. I mean, what I would say about corporates in Latin America, and even small to medium-sized corporates, is it's the emerging market within the emerging market, right? In Brazil or Mexico, 70% of the population is what they call sort of C-, D, and E. So the lower income, middle to lower income classes. So there is a sense that businesses have to figure out how to serve these populations, and they're going to have to adapt their products and services, because in banking and many other sectors, they've been serving the top of the pyramid since time immemorial. So there's a real business case, to Jorge's point, and I don't know if they'd call it impact investing or not, but from good business, this is the emerging market within the emerging market, and how our business is going to change and reinvent themselves to serve this market. So again, I don't think they call it impact investing, but we often find ourselves co-investing or collaborating with these businesses because we like that perspective. We actually often call them accidental impact entrepreneurs, and those are our favorite kinds because they're thinking about it from a business perspective and thinking of low-income people as customers, not as beneficiaries of charity. And so we love that perspective. So that's
and is that in line with?
Yeah, well, I can give you an example. A couple of months ago, we announced a partnership with América Móvil for 18 countries in Latin America. And the idea there is to offer financial services to the subscribers of mobile phones in the region. The negotiation wasn't, easy at all. I mean, you're sitting there with Mr. Slim and his team talking about reaching his client base and offering different ways to complete financial transactions and potentially offering other products and services too, because that's what we want to do. I mean, we really believe that inclusion should be around using the payments platform to offer insurance, savings, and eventually credit if needed. But that was a very harsh, negotiation, if you could imagine. And so it's not. Nobody was talking about, impact investment there. I mean, we were talking about pure business. I mean, it's very relevant for initiative for the bank and for América Móvil too. So that's
And Felipe, as I don't want to say it becomes mainstream, but as people sort of begin to target this lower, maybe more base of the pyramid with more traditional businesses, et cetera, is there concern? That the impact is sort of getting lost in the race to profitability. Sort of the way check cashing or some industries in the U.S. Get criticized that target the bottom of the lower end of the pyramid. Definitely,
and I think, like in any other movement, I'm very familiar with the fair trade movement since it's perhaps its origins. The pioneers are very much worried about it's about real impact for social entrepreneurs that are about transforming and changing the world with their venture. When Nestle and Kraft started talking about fair trade, everybody was like, "Is this going to get polluted, or is it? Are we gonna change the definition?" And I think we have to be open of these things have to scale and they have to be mainstream. And as I mentioned at the beginning, they can be different ways of getting engaged, in particular in the bottom of the pyramid. And this is a personal appreciation. I think it really has to be understood that it can't be only about getting them to consume. There is a big elephant in the room, and it's whether we can continue with our consumption patterns. And it can not only be about getting access to products and services, it has to be about empowering the communities also to generate their own income and to give them the ability to manage their destiny. And that's where we really, I think, have to be careful about not eroding the objective of this in the start. But there is that worry also. But there is also the need to scale and to be broader, because we have to transform financial markets.
Right, and I guess maybe we could, before we talk about the challenges, we could maybe celebrate some of the successes. I mean, I don't know if you guys want to talk about, some of the successes, role models, et cetera, that you've seen in Latin America in the last few years that are sort of epitomizing this movement, because I'm sure not, everyone in the room's been following it that closely.
Most of the examples I think of are actually in microfinance. I think when you think about the longest standing sector, again, that way preceded the coining of the term impact investing. some of the most successful and commercial microfinance banks in the world are in Latin America. You think about Banco Sol in Bolivia, Compartamos in Mexico, Mi Banco in Peru. Almost all of those started as nonprofits with philanthropic funding. The NGO Acción International helped start both Mi Banco and Banco Sol. Compartamos was started with some USAID involvement, and I think there was a really interesting and at the time revolutionary decision to convert to for-profits and to say, as an NGO, we only have access to philanthropic money. If we have a vision of serving millions and millions of people with a suite of financial services, we have to become banks. And there were many steps along the way in that journey. You can't just go straight to a bank. Right. There are lots of different financial and legal structures they had to pursue. But today, most of them are top 5 banks in their countries, and those are based on serving low-income people. They're the top banks. They have the largest asset bases, and so those are I think good success stories, and I think inspirational stories for both investors and entrepreneurs, saying there are business models that provide essential products and services that can be profitable and attract private capital. Right. That's pretty powerful, and so it's led other, I think, people to think about, well, what about healthcare? What about housing? What about water? Are there business models that can attract capital and scale far beyond a nonprofit that only has access to the philanthropic wallet? So that was kind of a real, I think, mental shift that's still going on, I think, in many places. So.
Yeah, well, now that you talk about these players in Latin America, we participated in some of the milestone transactions of these institutions. For instance, in the case of Compartamos, back in 2002, we structured a bond offering, a local bond offering, which for the first time linked pension funds and institutional investors in the country with rural micro-entrepreneurs, because it was an investment-grade transaction, structured with a partial guarantee from the IFC. So that allowed the institution to tap these institutional investors. And, we started to see how microfinance became like a new asset class for many of these investors. And now they're following, and now they're frequent issuers. So that's interesting. But now we are very excited about opportunities around savings, around supply chain. We have a partnership with the government of the city of San Francisco, where we are offering to low-income families and students from public schools at the kindergarten level, we're offering savings accounts in a program that's called Kindergarten to College, where there's a matching for each dollar that the family puts. The city of San Francisco, the program itself, puts another dollar, to a certain limit, of course. But then we are able to provide financial education, but in a practical way. Now they have a savings account, and the goal is for them to reach college, and the funds will be freed once that happens. So it's working with children around savings, ideas like that, I think, are very promising, and we're very excited about it.
I think when you ask about success stories, I think going back to that blended value concept, Lorena is here somewhere, yeah. I think, for example, Ashoka has done a great job at identifying the success stories of social entrepreneurs that have been able in the region to create systemic social and environmental change. And there we could have great success stories like Fabio Rosa in Brazil, who diminished electrification costs by 70% and just made electricity available to places you couldn't have never think of, or like Catalina Koch in Colombia that developed a certification for fair trade or for environmentally conscious gold that ended up transforming or creating the fair trade standard for gold. Or Lumni, a company, and I mentioned Daniel, my partner, because he's been in the board and as an investor in Lumni from the beginning, that revolutionized as a financial organization based in Latin America and then expanded to many countries the way that education is financed. So I think we have success stories on the impact side, and there's great networks. On the financial side, it's an emerging field. The exits, which is very much, or the acquisitions of how financial success is measured in the web industry, it's a very nascent stage at which these social entrepreneurs are wanting to become fundable and attracting impact investors. So there are not various cases, I would say financially, I would agree, beyond microfinance, but they will be. And if you look at a company like Natura Cosméticos or Body Shop, to make the comparison, are you familiar with Natura Cosméticos in Brazil? Since the beginning, they were about community well-being and environmental sustainability. They were a social enterprise at some point. Or if you look at Juan Valdez Coffee, great, very successful in Colombia, perhaps not so much abroad, or Panama and Ecuador in the stores, but they are about producer-owned value generation, and these are great businesses. Ben & Jerry was a social enterprise at some point, so we will start seeing the financial value as it emerges, but definitely the impact from social entrepreneurs is there. We just have to identify them, work with them, understand what they need, and fund them in the right way.
You mentioned that you say that social entrepreneurs there. I'm sort of interested in the group's view in terms of the ecosystem. Obviously, for this ecosystem to develop, you need the capital and you need the projects, the entrepreneurs, et cetera. Do you think that ecosystem today is fairly balanced? Or are there more capital sort of chasing too few entrepreneurs, too many entrepreneurs, and the barrier to entry is capital? How do you see sort of in Latin America the ecosystem, and how does it compare to the ecosystem, say, in the United States or in other regions, if you have any views on that? Feel free, jump in. Don't be so polite.
Oh, don't worry. So it's interesting. The biggest line in impact investing is that there's too much money chasing too few deals.
Is that a line, or is that?
I think it only starts about an inch deep. If you probe down a little further, it's that we've raised a lot of mid to late stage capital. So there have been a lot of funds raised, or not a lot, but relatively, there's now fund of funds being raised out of major financial institutions. But these are at best late stage private equity, even fixed income and debt. And microfinance is probably the only subsector of impact investing that is ready to absorb that capital. When you talk about all the other essential products and services that I was mentioning, healthcare, education, water, really what those sectors need is what microfinance had in the beginning, which is early stage risk capital. People who are willing to lose some money and to roll up their sleeves and support entrepreneurs in that very disruptive innovation iteration process. And so one of the reasons I most frankly left my former institution, which was primarily in the fixed income debt space, to come to Omidyar is... I
shared their name, by the way.
is that Pierre, our founder, who founded eBay, is constantly, it's sort of a little scary sometimes, pushing us further up the risk tolerance and saying, go earlier, look at the pre-revenue. These are sectors that need a ton of experimentation before they're ready to absorb, the capital markets. So I think that's the main challenge, is that perhaps we've raised the wrong type of capital for the phase of development that the sector is in outside of microfinance. And we need more folks with industry sectoral expertise who are willing to sort of roll up their sleeves and maybe lose a little money here and there. So that's actually what we're on the philanthropic side of our shop. We have a for-profit venture fund and then a foundation, and in the foundation we're actually really focused in Latin America and other regions of the world on supporting entrepreneurial ecosystems. So how do you support early stage entrepreneurship when most people coming out of school in these countries, in Latin America and abroad, are still aspiring to be senior executives in corporates or senior level government officials? They're not aspiring to be entrepreneurs because that's seen as high risk and low return. So how can we get that cycle going, regardless of impact investing, just the general entrepreneurial cycle kind of jump-started?
So how do we get that going?
Well, I guess two of the results of the, results of the success of microfinance have to do first with the creation of the industry. Once these institutions proved that this target market was creditworthy and that they were creditworthy themselves and that they could have a profitable business model, that brought in competitors. So just to give you an example, in Mexico, in the last 2 years, we have seen around 150 new institutions that are coming in for different ideas, perhaps very for-profit driven, perhaps others more socially driven. But what it is a fact is that the success of the IPO of Compartamos brought in a lot of players. So and that has its risk, because you're starting to see some over-indebtedness in some regions, and that's a. And then the second big result of the success of microfinance is that these institutions themselves, being so successful, they raised lots of money and they cashed out, and they are creating new funds to do some other stuff. So we're seeing funds in the region. ACP is a pretty good example in Peru. So you're seeing how they want to replicate their success in other areas, in healthcare or in housing or in other areas that are perhaps related also to financial services. So these are, I think, the two major results from my,
And how do we, sort of jumpstart that earlier stage, more risk-taking kind of venture in Latin America?
I think we have a great asset in Latin America, and it's very close also to the history of the founding of trippplus through the family office that Daniel leads, and it's family offices. Historically, family offices have been more than the institutional players, more or less risk averse, and more willing to take risks. And they're doing philanthropy anyway. And philanthropy is risky. When you're doing philanthropy, no one talks about risk, but philanthropy has a huge risk that it won't work, or that it will not be sustainable through innovation and through the marketplace, but no one really measured that before. Exactly.
Guaranteed 100% loss.
So in the networks of family offices and corporate foundations, I think with the philanthropic conversion, we have great opportunities to create risk. Overall, the SME and entrepreneurship culture of Latin America, perhaps Brazil with SEBRAE and Chile with some of the government initiatives, they're more developed, but most of the other countries really don't have the cluster approach, really don't have the ecosystem services approach like Silicon Valley generated. We really need a lot of that to replicate that in Latin America. We're seeing some good steps.
Let me interrupt, because it reminds me, there's a well-known venture capitalist in Silicon Valley, Dave McClure, who has a fund called 500 Startups. He's sometimes derided as inventing or revolutionizing the spray and pray strategy, where you just sort of put a lot of money out there and pray that you don't lose it all, and you find one Facebook, one Twitter, and you make it all back on that investment. But it's interesting, because I was with Dave in a couple countries last month, and he was meeting with local economic groups, people who you traditionally would think as angel investors, and almost in every country, their message to him was, this isn't Silicon Valley. We don't have good entrepreneurs. The problem's the entrepreneurs. We'd love to put more money to work, but there just aren't entrepreneurs. And Dave's response, and I'll be a little politer than Dave, was, that's a load of crap. That the reality is the entrepreneurs do exist. You guys have to be willing to invest. And with one cycle, with one or two small success stories, you're able to prime the pump and maybe not create a mini Silicon Valley, but there's no reason why Santiago or Mexico City can't have thriving entrepreneur ecosystems. I mean, does the same thing sort of hold true for social impact and smaller, earlier stage ventures that might be more revolutionary?
Yeah. I'm just going to jump in fast.
Come on, go.
Definitely. And I think it's about, and I totally agree with the fact that we don't need a Silicon Valley for it to happen. And I love the network approach of Omidyar. And I think what we need is fusion of networks. Ashok already has a network of social entrepreneurs. It has a network of support. New Ventures is identifying. It's another network that is accelerating worldwide. We have networks of early stage impact investors. We have networks of colleges and universities that are working on this. We have B Corp. Those of you familiar with Benefit Corporation of the B Corp movement coming as a network into the regions. So I think we don't have to close this so geographically as a cluster. We really have to provide the regional and fusion of networks to create that ecosystemic or that systematic transformation, but it's very much needed to create the field and to create the ecosystem services that they require.
Is anyone trying to jumpstart that?
Yeah, I mean,
other than you guys, of course.
Yeah, we're alone. No, I mean, I think there is a bit of a feeling that a rising tide, raises all boats. We're not necessarily just saying, we're going to jumpstart base of the pyramid entrepreneurship ecosystems. We want to jumpstart ecosystems in general because we think smart entrepreneurs, again, see the emerging market within the emerging market, and therefore you're going to have some pretty smart entrepreneurs that are impact entrepreneurs, again, accidentally. So we're not, I think if we get too precious about the social entrepreneurship, I think there is a subscale tendency, and so I think a desire to build sort of a larger movement and a larger support system. I think also, to be honest, you have to be honest about the role of government. I mean, when you look at the history of venture capital, in the 70s, people thought it was crazy. I'm not going to invest in that. And it wasn't until there was, some real regulatory change that opened up a couple percentage points of pension fund assets to be able to dedicate to a liquid investments, say 2-3%. This has also been done in Brazil, and it has unleashed a flow of capital that's local capital. And so I think thinking about certain things that the government can do to improve the enabling environment. Another thing that Brazil has done is capitalized seed funds. That's 100% government funded. Thank God the government is not doing the investing. They've actually RFP'd out, or through a selective competitive process, you have fund managers that manage these government seed funds. Then you create a class of professional fund managers that then can go on and raise private capital, and you have money at the early stages. So I think there's things that private interests can be doing, but I think you really have to be partnering with local governments on this as well.
And what's your all sense?
Yeah, well, I agree with the role of governments and regulations. I think Brazil is pretty much the exception in the region. I think other countries still need to do a lot in terms of enabling the whole system to work. For example, the foundations that would want to invest in very early stages, how can we have them benefit from the upside of their investments? That's very limited from a fiscal standpoint in other countries. So you need to unlock this capital by providing the incentive from the regulatory standpoint.
And Felipe, I'm originally from Chile. Chile has a sort of Startup Chile program where they try to bring innovative startups to Chile. There's a $40,000 grant. Are there any talks of governments or NGOs trying to sort of seed innovation in the impact space in that way?
I'm not totally sure. In the Chilean case, they definitely should be. And I think we're starting to see a trend where, I think a very positive one, where governments are setting up social innovation executive offices.
But governments in Latin America, or governments?
Yes, governments in Latin America, replicating very much what the Social Innovation Office that Obama set up, that Jonathan Greenblatt now leads here in the US, and we have one in Colombia. Chile is also starting to think about how government can create an enabling environment, and perhaps it's about integrating entrepreneurship and social change into educational curriculums. Perhaps it's about legislation that will allow foundations to have program-related investments that can be tax deductible. Perhaps it's about convening and catalyzing through these initiatives, different actors in the country. So government should definitely play a role. But I do see a rising wave in the Brazilian government, the Chilean government, the Mexican government, the Colombian government, starting to think about social bonds, public bonds that have social returns, starting to think about what is it that we can do to create that enabling environment, because it's a smart investment for their mandate as government. But it's very early stage, very early stage.
And from Citibank's perspective, I mean, from your perspective, do you see that as an emerging trend, or something we're still going to be talking about as emerging, in 5 years, 10 years from now?
Yeah, well, I like to think it's happening. If I tell you now that we get, I don't know, 50 resumes and curriculums from Citibank people around the world wanting to get involved with microfinance and the work of the bank in this area, I think it's inspiring. I think it's motivating. And very young people that are starting to think about this impact initiatives as a career opportunity. As Felipe said, the curriculum in universities, Harvard, Stanford, Columbia, I mean, they all have social entrepreneurial labs. They all have all these courses, and they are oversubscribed. So I think it's early days. I agree, but it's happening.
And I guess, Elisa, from your perspective, sort of, what's for the people here who don't live and breathe this space every day? If you had to sort of think about takeaways, sort of what's happening in social impact in Latin America, and sort of what's not happening that you hope will be happening in the next period of time.
Yeah, I mean, I think it's a little bit what I said before, which is I do hope, and I think Felipe made a great point about family offices. I think there's a great tradition in Latin America of family offices, and perhaps activating them as early stage risk capital providers in this space. And again, thinking about beyond philanthropy, what can be done. And this is certainly happening in Mexico and Brazil, where I've been spending most of my time the last couple of months. I couldn't speak about the other countries at this point. So I think, I would love to see more at the early stages, because that's the precious capital. You don't have to provide a ton of it. That's the nice part, right? At the later stages, it's
right.
Really like hundreds of millions of dollars. But in the early stage, it's not a lot. The average amount is in the hundreds of thousands. But to think in those family offices and networks of reasonably wealthy investors locally, thinking of this as an opportunity. I think we have a lot of education and convening and discussion to do around this. And as I said, I think the government has a role to play also in curricula. I mean, I want to see more entrepreneurship classes in business schools, more entrepreneurship clubs. I don't want to just see entrepreneurship clubs in Harvard, Columbia, and Stanford. I want to see them at Católica and, ITAM and, all of these elite great schools that you have in the region. So I think we have I don't think it's a mystery what needs to be done. It's just more getting to the right people and the internal champions to make it happen.
And is your sense that Latin America is, a step or two behind the United States and the rest of the world, or do you think it's basically at the same place?
In impact investing?
Yes.
No, I mean, I think Latin America, as I said before with microfinance, has some of the greatest examples of impact investing out there in terms of both commercial and sort of social returns. I think the whole world has a way to go in figuring out how this manifests in other sectors beyond financial inclusion. I mean, we just have not cracked that nut. But I think Latin America certainly has the human capital and the sort of investor savvy, and it's also perhaps, as you said, building the entrepreneurial kind of talent as well to be innovating in these areas. But yeah, no, I don't think I wouldn't focus on the region if I thought it was behind. But yeah, no, there's a lot of opportunity.
Well, I'd like to actually thank you for wearing a watch that I could actually read, because I see we have 10, 15 minutes before the cocktail hour, and I don't want to leave no time for questions. And one of the few skills I actually have as a moderator is making sure that I get people to their drinks and back home on time, so I'll try to stay true to that. I think we're going to open it up for any questions from the group. Please raise your hands or some questions. we'll probably, as I say, try to take 5, 6, 7 questions, and then feel free to attack the panelists at the cocktail hour.
Hi, Michael Schwartz, RBA Capital. Two-part question. What do you see the future of microfinance in Latin America in the next 10 years? Will it face the same issues of oversaturation that you see in India now? And do the new relatively new products such as energy loans will have a permanent mark?
Take a couple questions.
Why don't you fire away? We'll do this, quick McLaughlin style.
I think the industry is consolidating. You're starting to see regional players. You're starting to see the winners. You're starting to see the groups that are acquiring or creating new microfinance institutions in other countries. So they're becoming regional players, big ones. We're also seeing local banks getting involved. So it's an industry that's consolidating. I'd say that summarizes.
I agree. I think also there's this broadening of the topic around financial inclusion. So we've certainly seen this internally at my organization, the idea that you don't have to just focus on microfinance institutions as delivery mechanisms for financial services. There's actually intermediaries with much better penetration, like the mobile. And so being a little bit agnostic about who delivers the services, as long as they're high quality, affordable, and that they're penetrating at scale. And so that's, I think, the most exciting next evolution, is not perhaps thinking of these, geographically specific microfinance institutions, but what are the real delivery mechanisms that can get either further into the market. In terms of saturation, you're right to be worried about saturation. I mean, I think we've seen over-indebtedness crises throughout Latin America, throughout the world, South Asia, to some degree in East Africa. And it's about good regulation. It really is about, holding these institutions accountable to good practices. It's about evolving the regulatory framework to include good consumer protection laws that are enforced. And so we're ways from that to some degree, but that's what really needs to happen to mitigate those kinds of risks.
Yes, hi, my name's Al Salas with Alliance Bernstein. I work with a family office in Central America that is trying very hard to address the dearth of workforce housing, particularly in urban centers in Central America and other Andean countries. They've developed a pretty impressive track record in terms of creating viable workforce housing projects. But outside of friends and family and/or multilateral project financing vehicles, there doesn't seem to be a tremendous amount of appetite to address what is a meaningful dearth of workforce housing in urban centers. And so, as an asset class and I don't think it's taken advantage of the impact investing label to see if it could draw some attention to itself. And that's something that, as a result of my being here, I'm certainly going to turn to my clients and say, geez, there's an opportunity here to identify and to label it impact investing, because I think it really is on many levels. But I asked the panel and I asked the folks in the group to share your thoughts and ideas on how perhaps this track record can be leveraged to identify real equity capital to support workforce housing development in the region.
What about more generally the issue what you sort of were describing, maybe Felipe, the accidental or things that rather than having I guess economists call it externalities when they're negative, but social impact as sort of a natural result. Is that rebranding? Is that something that's sort of become fashionable that people are putting energy into in projects like that, where they realize, hey, we can't raise the money if we're just a generic, perceived as a generic real estate play. but if we put the social label on it, we can raise the money. Have you seen that trend? Is that happening? Does that happen? Microphone.
A lot of opportunities like that in rebranding and repositioning what is being wanted, or the value that is generated by the investment, and especially in the way you frame it and the way you develop your impact indicators and the audiences you're approaching. That particular case, it's not my field of expertise in particular real estate, but if you brand it that way for corporations interested in the retention, motivation, and attractiveness of their talent and their workforce relationships and the long-term avoidance of labor interruptions, so on and so forth, then you can really convince them to invest beyond equity. Governments also, social bonds. No one is more interested in the government than on having good workforce housing. It will be good for security and crime. It will be good for overall urban living and citizenship. So government, hey government, I have an impact investment here. And this is with a disclaimer in our relationship with IDEAME, but crowdfunding. Crowdfunding is definitely next. Crowdfunding platforms where we can potentiate the long tail of small investments. Perhaps it's hard to convince an equity or private equity bank to see it as an impact investment, but trust me, you can convince by georeferentiated crowdfunding when the platforms are there for the people that live in that city, for everyone to donate $10 to better housing to reduce violence and crime. We will be able to do that with crowdfunding platforms in the future, hopefully.
Thank you very much.
Well, on the topic of housing, not specifically on workforce housing, but housing in general. We do have a couple of partnerships that I think are interesting with Inter-American Development Bank and with Human for Humanity. And we partner with microfinance institutions to develop the products for them to work on new housing or house improvement, which is also becoming a very, interesting product of some microfinance institutions. So we fund the portfolios for them to finance small improvements in housing. I think
actually the next question is from Untitled para mi país, who hopefully you guys will partner with, who's a Habitat Like for Humanity entity and NGO in Latin America.
Yeah, exactly. My name is Luis Ortiz and I work for Techo, a traditional non-profit, one of those that guarantees 100% of financial loss. And only financial, of course, because in impact is, of course, very good. And my question is regarding exactly what's the role of the traditional non-profit organizations in this huge impact investment sector, and if there is actually a role for us to play over there. And on the other hand, how is, from the consumer perspective, how the consumers can motivate to traditional businesses to become impact businesses, because I believe that's where the key is actually, right? Thank you.
I think there's absolutely a continuing role for nonprofits. I think one of the dangers, actually, of the rise of impact investing is to sort of take away from the role of philanthropy and nonprofit organizations. I think even within, impact investments, if you really dig down, there's usually a nonprofit service provider or some sort of role that a nonprofit is playing to make the impact investment successful. We work a lot with nonprofits actually on developing earned revenue strategies to increase the scale and sustainability of their impact. So that's something also I think to think about, to learn from the impact investing field, is to think about your own organization and how many more people could you help if you expanded beyond the philanthropic wallet. And so that's just something to think about in terms of your own organization. But I think absolutely in terms of service provision and technical assistance, capacity building, often if you dig down in an impact investment, there is some implicit subsidy there provided by a nonprofit organization. Felipe,
Yeah.
do you want to take the consumer question?
And I totally agree with what you say. I think we cannot underestimate the role of NGOs and their social tissue and the understanding of communities and the importance of philanthropic funding at some point. Consumers have to step up to the plate also. And there's fantastic initiatives going on. Fair trade is perhaps one of the ones that is closest to my heart, and that I've been involved for 11 years now. But the act of consumption is an act of citizenship also. And that's something we have to teach in our schools, and that's something that we have to pay attention as consumers. And it's a cup of coffee or a chocolate bar can be creating impact in the places where environmental sustainability and poverty alleviation is needed. Platforms like Good Guide, has anybody heard about Good Guide? And I think this is great in terms of transparency of impacts. Right now, consumer good products, and of course there has to be the infrastructure behind it in terms of indicators, but you can scan any product with Good Guide on your phone and have social, environmental, and economic indicators of the enterprise that produced it. And we're going to have open data to more and more to the impacts that there is behind these consumers. I also want to point out the big elephant in the room, especially India, China, Brazil. There is an issue also as to rethinking consumption patterns, and that's something that I really think needs more thought. But at least from the conscious consumption perspective, consumers have to ask more about where their money is sleeping, what is being done with their saving account, what is being done with their private equity. Workers have to require more information about their pension funds and how they're being invested, and try to have information at the point of consumption with the emerging platforms, or the labelings.
Yeah, I think we have, just a couple more minutes. Felipe at one point had made the point about the stories and how important those stories are to this issue of social impact. And as I look actually around the room, I know a number of you, and so for instance, I thought we could just hear at the very end, a very impromptu and unscripted, but there's a couple people here that I know have been very involved in social impact and in evolution of it. I know you all in Untecho, for instance, have Untecho labs, etc. Maybe you want to talk about that just for a minute, and I'm going to follow up with you.
Yeah, for sure. Well, Techo is a Latin American nonprofit organization with presence in 19 countries throughout the region. And from our experience working at the slums, we discovered that a traditional charitable nonprofit activity is not enough to bring development to the communities and the families living in those communities. And we started this initiative of our own social innovation center, in which we are basically trying to find not only profitable but like sustainable solutions for the bottom of the pyramid, and try to engage the youth, which is usually thinking about how to create a better Mercedes-Benz, for example, to start thinking about how to create a better solution, basic solution for families living in the bottom of the pyramid. So that's basically the idea of our social innovation center. And now with the Techo Lab, we launched a contest to, I don't know, more than 150 different universities throughout Latin America to people to propose and start different projects regarding these issues.
Maybe you could pass the microphone to Danny Echeverria, who's the chairman of the Corona Foundation, and I know his company, for instance, has you led an initiative, if I remember, that sort of focused bottom of the pyramid women as sellers of your traditional company's goods. I thought.
Yeah, so we have a program called Viste tu Casa Corona, which is a direct sales effort in Colombia. In about 4 cities, we've hit about, or touched, I guess hit is the bad word here. We've touched, it's way better, about 50,000 families with a direct sales effort, offering remodeling programs and providing micro credit to finance those remodeling programs by bringing tiles and some of our building materials into homes that have either dirt floors or cement flooring. And we partner up with microfinance institutions so that we're not providing or financing the whole operation with our own balance sheet. So that's just one example. Obviously, we see that as a completely blue ocean because none of our competitors are in there, and we're partnering up with many times single mothers, heads of households, empowering them, giving them the trainings and the tools to become self-sufficient and generate new income sources, while at the same time improving the quality of life of the families that they're touching.
That's great. I know Lorena, who's from Ashoka, one of the leading NGOs that supports social entrepreneurs in the region. Maybe you could.
Thank you. I just have a very positive comment, more than a question. From Ashoka, what we're looking at is a very interesting trend, which is we're getting our social entrepreneurs younger with a for-profit business model to solve a social problem in a systemic understanding. And I think right now the challenge is how do we partner with all those corporations, how do we support all those businesses to really understand that there's a lot of business by doing good if you put your money where you should put it. So I guess, having this conversation in Miami is a very good example of how the mind shift is happening and the type of people that I'm looking in the floor. So I think this is very positive.
Well, thank you very much. I think that'll be the last word. I wanted to just go around a little bit because, as opposed to a typical panel or a typical forum, looking around, I think there's a number of people here who have incredible stories, who are very involved in this space, and I really hope that during the cocktail hour or hour and a half, you all get to know each other, because I think there's tremendous resources in the room beyond the panelists. But again, I'd like to thank again Madeline, the council, the panelists, Greenberg, Traurig, for putting up with me all these years, for putting together such a great event. So thank you very much, all. I appreciate it. Thank you. Appreciate it. No PowerPoints. Well, I was rooting for Ireland against Spain this afternoon. They lost 4-0. So. Right.